Good afternoon and welcome to today's webcast, an introduction to managing fraud risk in banking. This webcast is held jointly by the Chartered Banker Institute, Manchester Metropolitan University, and ICAEW Northwest. In a moment, we will commence the webcast and meet today's speakers, Ian Cleverton and Phil Caffrey. Ahead of this, please note that we are recording the webcast and it will be available to watch on demand shortly afterwards. Please feel free to submit questions via the Q&A box at the bottom of your screen, and our panelists will answer them during the later half of the webcast. We hope that you enjoy today's session and thank you so much for joining us. Ian, over to you.
Lovely, thank you, Emma. Welcome everybody, and it's great to see so many of you on the call today. I'm delighted that, just to explain my role, I am Senior Lecturer in Banking and Finance at Manchester Metropolitan University, and I'm delighted that I am just purely introducing the expert today in terms of our introduction to managing fraud risk. Phil and I have actually worked together in my previous life in Lloyds Banking Group in the past. Phil is still there, as you'll find out all about his particular role in a moment. One thing to mention, we will have a little bit of a question for you, a little bit halfway through, a bit of an interactive exercise for you, so stay tuned to that one. But also, if you have any questions, please do put them into the Q&A box and I'll pick them up. So my job towards the end, I'll facilitate any questions that you have and put them across to Phil. I think the presentation is going to last about 40 minutes. We're very exciting and interactive, and then Phil will handle any questions and I'll manage that at that time. So without further ado, let me introduce Mr. Phil Caffrey.
Hello everyone. Thanks very much, Ian. I'm just in the process of sharing my screen, so hopefully we'll get pictures on for you anytime soon, and then I can crack on. Ian, could you just let me know when you can see the screen?
Yep, it's there in presenter view, all loud and clear.
It's working. Fantastic. Well, thank you very much indeed. Hello, everyone. Thank you for having me. I'm really looking forward to talking to you today about managing fraud risk. I'm Phil Caffrey, as Ian said. I've been with Lloyds Banking Group for, say it quickly, 38 years in lots and lots of different roles. This on the screen that you can see now, this is Lloyds Banking Group. A lot of these brands you're probably familiar with. It's a pretty huge and very varied organization, as you would imagine. We look after a lot of customers' money and data, and so the fraud and the risk of fraud is very real. The session applies, though, equally to other banks, big and small, and also to other types of organization in terms of the threat of fraud and the strategies to prevent, detect, and mitigate against it. So, obviously, I look at the world of fraud through the prism of Lloyds Banking Group, but the financial and non-financial markets all present opportunities for fraudsters, and they are potentially really quite big opportunities. So on the screen, you've got a few of the other financial institutions that you've probably heard of. Obviously, there are dozens and dozens, maybe even hundreds more. And also on the list of potential targets for fraudsters are businesses such as the mobile phone providers, the NHS, etc., etc. The list is actually probably almost endless, and the fraud threats can have real similarities actually across banking and other businesses. Fraudsters are always looking for and capitalize on any weakness in a business's systems and processes to make financial gains or to facilitate future fraud. And so fundamentally, for any business, managing fraud, it's an ongoing challenge. And there are similarities in the way that organizations big and small will tackle this. Before we get into looking just some of the detail of how we tackle fraud in an organization like Lloyds, let's just set some context. UK fraud losses, so total fraud losses in 2020 were £1.26 billion. Now that's a really big number. Here's the breakdown of what that number looks like in percentage terms. The biggest areas are payment card and authorized push payment fraud. Authorized push payment fraud is sometimes referred to as bank transfer scam fraud, and it's where the fraudster somehow convinces the customer to make the payment themselves. The volume of APP fraud was up 22% in 2020 from 2019, and the value was at 5%. Now, unfortunately, that trend has continued and actually worsened in 2021. We'll look at some of the reasons for that later in the session, but the P word, pandemic, has had an impact on that. APP fraud actually is very difficult to detect. And I'm going to talk a little bit more in a bit more detail about APP fraud, because it's one of the biggest fires that's burning really in the industry at the moment in terms of tackling fraud. So really difficult to detect. After all, it's actually the customer that's making the payment or withdrawing the money from their accounts. So how do you identify, this is the challenge we've got, how do you identify which payments are genuine and which aren't when millions of transactions are happening every day? So just hold that thought. As I say, we'll look a little bit more at that later. So card, remote banking and check fraud loss in 2020 was 783 million. And there was 479 million pounds of APP fraud. The silver lining, if there is one, in the middle paragraph there on this slide, is that for every £10 of fraud that's attempted through their prevention and detection and systems capabilities, banks and card companies actually detected and prevented nearly £7. So for every £10 of fraud attempted, £7 is stopped. So that number could be significantly bigger without the detection efforts that all banks and the wider related companies put in. If you're interested in going deeper into the fraud landscape in the UK, UK Finance, which is the trade association for the UK banking and financial services sector, published various reports and documents, including an absolutely fantastic document called the Fraud, the Facts. This one's the 2021 version that I've taken some of this information from for this slide. It really goes into depth about fraud in the UK, and it's actually a really interesting and engaging read. It's not dry at all, it's fascinating. So even if you're not living and working in the world of fraud, but you're just a punter, like all of us will be, just a customer of a bank, I really recommend that everyone goes and has a read. At the end of the session, and I think we're going to share these slides, at the end of the session I've got some links and so on for further reading, so it's in there. Very well worth a read. So let's just stick with the subject of APP fraud just for a second. Financial firms have a relationship with their customers. So in this relationship, the bank has a duty to protect its customer from fraud. I mean, that's a moral duty, let alone a regulatory duty. After all, I suppose, even though we can educate the customer to be aware of fraud and scams and ways they can protect themselves, we can't and shouldn't really expect them to be fraud experts. That's our job. There is, however, somebody else in this relationship. That's why I've called this slide 3 as a crowd. And that's the fraudster. When I say fraudster in this context, I'm not really talking about the lone chancer, the one-off merchant who might be a bit of an opportunist. Now, what I'm talking about is really highly sophisticated, organized gangs of criminals who target groups of customers in large numbers. And they know their stuff. They employ sophisticated tactics to dupe customers. They are fraud experts, so the experts in this equation are the bank and the fraudster. They're backed by well-funded criminal organizations, well-funded from fraud. You wouldn't be surprised to find out. And the money they steal actually funds the drug trade, people trafficking, modern slavery and so on. So it's a massive issue, and it's a real priority for everybody in the industry that we keep tackling this area. Now, I did say that I'd talk to you a little bit about the pandemic and the impact. I'll just flash these up on screen. So again, this is from the UK Finance document. If you're thinking that APP fraud is perhaps not really something that would affect you, and organised crime is sort of a distant threat, just have a look at some of these. Over the course of the pandemic, all of these types of scams increased in frequency, certainly, well, in volume, and in some cases in value of fraud as well. Just see if you've heard of any of them, either through family or friends, or maybe you've had a smishing text or a phishing email. This is the organized business that sits behind these criminal gangs that is sending out those texts and emails and making those telephone calls. I actually had my own near miss with the parcel scam, the one on the top right hand corner there. In fact, I actually nearly fell for a Hermes scam. I received a text saying that my Hermes parcel couldn't be delivered, and so could I pay, I think it was something like £1.45 to have it released from the depot. And I actually started filling in the online form and then thought, no, this isn't normal. And I stopped. And that's me. I work in fraud every day of the week. I'm very aware of the scams. I educate people on how to avoid becoming a victim of fraud, and I still nearly fell for it. So it's very easy to, very easy to do that. Fraudsters pose online and in person as genuine individuals or organizations, and they're really convincing. So just finishing off on the APP kind of front, really, and I've put this front and center in the session because it is such an important challenge for us. I've called this slide breaking the spell. You'll sometimes hear people say, how could he be so gullible? Or surely she could see that it was obviously a scam. Well, actually, these individuals and gangs, they are so clever and convincing that many highly intelligent people with no vulnerabilities, not the elderly, not the very young, they can be convinced by them. It's as if they are put under a spell that's really hard to break. Just very quickly, here's a scenario for you to ponder. I'll just speak this one through. So a bank customer was contacted by the police. She was told that the money at her bank branch was at risk because the bank staff were corrupt and colluding to steal customers' money, including hers. She was told that she needed to put all her money out of the, take all of her money out of the bank and buy into gold and Rolex watches and so on, and that would protect it. The police advised the customer that they would hold the gold and watches for safekeeping until a new safe account could be opened for her. And once opened, all the money would be put back into the new secure accounts. So the customer was picked up by a driver and taken to the jewelers, where they told her which watches she needed to purchase. She did this and gave the watches to the driver. She was then instructed to transfer more money to a different jeweler to purchase gold, except it wasn't the police. And on this call, I think we can all see in the cold light of day, it seems that some obvious red flags there. Clearly, it was a criminal gang. However, they're so convincing that it's very hard to break that spell sometimes. In this case, the customer was then taken to another jewelry shop where, fortunately, the staff became suspicious after she'd advised them that there was a driver waiting for her. And they called the police after the shop, after she left the shop. And then the genuine police attended. They went to see the customer at her address, and they're now hoping to make arrests. Now, you might think that's kind of just made up for the purposes of the session and that it's a bit far-fetched. Actually, this happened to one of our customers 2 weeks ago. And it's a scenario that's sadly all too common, I'm afraid. So the challenge with APP, APP fraud, I'll refer to it as APP, is that once the customer is under the control of the fraudster, they'll often lie to the bank as to the reason for the transaction. So, for example, we had a case local to me very recently in the last few days where the customer withdrew a large sum of money as he was buying a car, so he said, for his niece. That wasn't true. He was a victim of a safe account scam. Unfortunately, the branch staff were able to break the spell in this case, but breaking the spell is difficult. And so different kinds of warnings. So on the slide here, different kinds of warnings, post-scam data gathering, pre-fraud trigger points and collaboration in the industry are all really crucial tools in fighting this type of fraud. So if you've got an interest in this and you're going to go and investigate fraud a little bit more deeply, then the APP world is one that you should perhaps pay some attention to, because it's very present in the industry at the moment. Okay, so let's get more into how we detect and deal with this. Just talking of education and awareness and warnings, you will have seen, I'm sure, warnings that pop up on your banking app, or maybe you've been asked questions when making a transaction in your branch or on the phone, like these ones. Don't answer this question, but just have a think to yourself: do you take notice of them, or do you even read them? So, do they become wallpaper? They do for me sometimes, I have to admit, because everybody's busy. Let's just walk through a couple of the Lloyds warnings just to illustrate my point. So let me just make that a little bit bigger for you. All of these warnings, like it or not, add friction into the process, and managing fraud is all about managing and balancing a very finely tuned scale between adding friction and protecting the genuine customer and letting fraud through. So it's a constant, loosening and tightening of that equation. So yeah, so this one in the top right hand corner, this is a warning to someone sending money to HMRC. The HMRC scam thing, certainly during the pandemic and certainly close to the end of the tax year, is quite a big deal. We know that fraudsters use fake text messages to dupe customers into diverting funds for their year-end tax return, as I say, and they go into accounts which are not HMRC's accounts. So we've got details of the HMRC's genuine accounts, and we ingest them into our systems. And if the account you're paying isn't on the list, we'll tell you using a warning like this. And these warnings are becoming increasingly blunt. We're working with the Financial Ombudsman Scheme, who are the final arbiters of reimbursement to customers, and they're telling us that the warnings need to be tougher. So Amber, that's the name of the customer, Amber, HMRC will never get this money. I don't think you could be clearer than that. Maybe we could, time will tell. Let's have a look at another one. I'm not going to go through all of these, but this isn't all about online transactions or the world of digital. This can also be about old-fashioned banking. So in this bottom left-hand corner, these are some questions of the type that you would be asked probably if you went into your bank to withdraw an unusually large sum of money. So these questions are asked in this way because we know that certain MOs, the modus operandi that fraudsters use, include some of these things that we're challenging the customer about. So let me give you an example that's connected to question 8 at the bottom of this slide. So this is a social media one. So imagine you get a WhatsApp saying, hi Phil, it's Ian. Really sorry, but I'm out in town with my mates and I've had my phone stolen. I desperately need to get a new one. I'm using Emma's phone to send this message. Any chance you could transfer some money and I'll pay you back when I see you? Really sorry. So is that far-fetched? Actually, no. This happened to a friend of mine last weekend. She thought it was her son and nearly sent the money until her husband said, that's a scam. Now, she's a doctor. She's young, she's intelligent, she's very aware and on the ball. But fraudsters know that if you have a friend or a relative in need and it's a quote unquote an emergency, people are going to want to help. And the judgment can sometimes be impaired. That's one of the characteristics of a lot of these scams. Sometimes there's a time component. Sometimes it's an emergency. Sometimes it has to be done by the end of today. So those are the kinds of things that that we're up against. And so warnings are important, but they're only going to be, they're only going to work if they're taken seriously when we receive them. So, the message always is when you're in a hurry, under time pressure, or concerned, it's easily difficult. It's easy to discount them and difficult to pay attention to them. So, I just encourage everybody not to. But in the context of managing fraud risk in the banking environment, this is one of the big challenges. It's how to, in that triangle of relationship between us and the customer and sadly the fraudster, it's how to engage the customer in that relationship and warn them in a really appropriate way without adding too much friction into the journey. Theoretically, you could stop all fraud tomorrow. All you would need to do is to stop every transaction and force the customer to come and identify themselves in person for every transaction. Clearly, that's not practical. So there's that balance that I talked about. Okay, let's get a little bit more now into how we actually detect fraud, and we'll get into some of the really fascinating ways that systems can do this. I'll talk a little bit about the broad approaches that banks can take to fraud detection. They're probably more than the two I'm going to talk to you about, but these are two broad kind of thought processes, and then we'll look at some of the systems themselves. So the first way that this can be done is using what I'd call a siloed approach, as on the left-hand side of the slide here, whereby the systems that the bank uses to detect fraud, they are specific to a channel. So as an example, the bank might deploy a system that analyzes inbound calls to its telephony centers. So that's the telephony channel, and it scores them for riskiness. Separately, it might have a system that looks only at credit card transactions and scores those for riskiness. So the channel there is payment by card, or payment, e-commerce, or whatever you might want to call it. And in these cases, the systems that are operating are separate, don't always necessarily talk to each other. They might be from different third-party vendors. And it can be quite difficult to coordinate all of the outputs of this approach, but it might suit certain organizations. The other broad approach, which is the one in the middle there, is to have a sort of a central brain system where there's one centralized super system that ingests all of the data from the peripheral systems and creates a combined riskiness score for the transaction, irrespective of the journey, the channel, the journey that the customer's in, or the channel that they're using, whether that's online payment, credit card purchase, or whether they're in a shop or ringing into us. And whichever approach is taken, there are some broad principles that characterize a fraud prevention detection model at a system level. So I've got those in the green box. I won't read through that. You can pick that up later if you want a little bit more detail, but they're there if you need them. So let's get into how we make this work in reality. Okay, so we're now going to have the pre-trailed, pre-warned audience participation. For this, you can use your phone to scan this QR code. Or you can go to www.menti.com and put this code in. I think, Ian, we're going to give a few seconds to do that, and then Ian's going to bring up the question on a slide for you. Is that right, Ian?
That's absolutely right, yes. So if you want to just grab your phone, if you can, if you haven't got that to hand, don't worry, you can go into a separate browser and type in menti.com and that code. So I'll just give you a few seconds to scan the code. What that will do is it will bring up some options that will and the question that we're going to ask you now, just to get your feedback. Whilst just giving you a bit of time, if you do have any questions as well, we've had one already that we've answered, but please put them in the Q&A section, and we will, if I can't answer them live, then of course I'll file them across to Phil a little bit later. Right. Okay, Phil, you'll need to stop sharing, I think, if you would please, before I...
Okay. Yep, just bear with me. Stop share, there we go.
There we go, fantastic, thank you. Okay, and share. Right, so what you should find is you've got menti.com. You can already see there's some answers coming in. It's to name as many characteristics of a customer transaction that you would like to know in order to build your fraud detection system. Do you want to elaborate on that, Phil? What sort of things,
Yeah, brilliant. Thanks, Ian. Yeah, so imagine you head up a brand new fraud team at a brand new challenger bank, and you've been given an unlimited budget, so that's how we know it's fictional, to build a fraud system. So this fraud system will be capable of gathering huge amounts of information about every customer and every transaction. And it'll understand how the customers typically transact. So what are the things that you would want to know? What pieces of data would you want to know that you could feed into this brain of a system that would allow you to do that? So let me give you an example or two. You might want to know, for example, when did that customer last change their password? Or you might want to know what type of device they're using, because if it's a different device than they've always used for the last 100 transactions, that might pique your interest from a fraud point of view. Specifically related to the transaction, you might want to know where it's taking place. Is it taking place in the place that the customer would normally transact business? You might want to know whether their payment card is actually present or not in the transaction. Is it a card not present transaction? So think as imaginatively as you want to do. There are possibly hundreds of potential tiny little data points that you might want to know about. So you can be as imaginative as you want, and we'll pick those apart in a second.
Great. Well, we've got quite a few answers coming in now. So if by the power of magic, if I take, hopefully, there we go. We'll see a bit of a word cloud coming up.
Wow, fantastic. When it grows in real time, that's clever.
It does, yeah, absolutely. That's why I usually hide it so people can't copy others, you see. But there's already I think the larger the word, the more people have actually used that particular point. So amount, location, and device are ones amounts. So even slightly different spelling can create a different one. So amount is definitely one of the most popular answers that we're receiving so far.
Absolutely, yeah. How long do you want to leave it, Ian? Shall we? You let me know when you want to move on.
Yeah, that's fine. Are there any comments you've got on that, Phil?
Yes. Yeah. Okay. Yeah. Let's crack on. I think I want to employ some people on the call. These are absolutely spot on. So the location and amount, actually, you might sort of think to yourself, yeah, obvious. but they're so important. And I can see there that linked to amount, we've got a little bit further down, unusual amount. You're right. If I think of my 86-year-old mother, she spends 20 quid at Aldi every week. If suddenly transactions for £250 from Waitrose start happening and the location is different, well, actually, that's very, very strange behaviour. So that might pique your interest as a fraud system rule manager. Yeah, forms of payment, protection of the page. Yeah, some good stuff. Time taken to complete. Yeah, really good one, that one. Last 3 transactions. Yep, so you can compare what's being purchased. So the customer that I told you about earlier on, actually, what I didn't say was that she was 91. This lady, absolutely disgrace that somebody would treat anybody, let alone a 91-year-old like that. But yeah, will a 91-year-old be buying a Rolex watch? Very unlikely. Password profile. So yeah, tons of really good stuff there. So that's really good. Thank you very much indeed for that. We've got everybody tuned in absolutely to what we're looking at here. Shall I move on and start to develop that, Ian, now? If I share my screen.
That's great. I shall stop sharing. It's interesting because I had a similar thing a couple of years ago when I was making a payment on behalf of probate that I was looking after for someone as an executor. And again, I had the phone call, the payment didn't go through, so I answered lots of questions. And for me, that was fantastic because it meant that, that I know those systems work behind the scenes. And it wasn't that the bank were taking care about that unusual amount of money, which I certainly wouldn't have been sending under my normal circumstances, was being looked after.
Yeah, absolutely. So well done, everybody. I mean, that's some really good ideas there, and there are potentially hundreds of things that you could know about your customers' activity that we can feed into our systems to help us understand how we can recognize when something isn't right, and we can use that data that's been collected to build a fraud model structure that continually assesses, analyzes, scores, and learns about behaviors, and that's where you get into the artificial intelligence piece, which is about learning more deeply. So we can use those events and indicators, behavioral profiles, and the customer's typical habitual activity to get to know them better, and that enables us to build up layers of systems to create sort of a protective ring around the customer using multiple systems which monitor transactions, understand and learn your device characteristics, model and measure your behaviors, learn your voice, learn what your voice sounds like, detect malware, and listen to phone calls to make sure that it's really you. So numbers of systems are available, tend to be bought in by third-party suppliers to supplement what a bank might have themselves in terms of an engineering build for that central brain, for example. So all sorts of ways of doing this, and there are multiple options out there, and in some cases multiple third-party suppliers will do a very similar job. So there's a good level of competition out there. So anyway, to do all of this, the systems that we use have to be told what to do. So it's all very well ingesting all the data, we've got to tell them what to do with it, and we do this by writing rules for them to follow. And rules are really just equations or algorithms that lead the system to say whether we'll either complete or not complete a transaction. So as the new head of fraud, imagine that you're meeting your team to discuss the rules for your new super fraud detection system, and you've got some data about some recent customer reported fraud, and you need to have a think about writing some rules to stop the losses. So we know from analyzing customer data that there are certain characteristics that are common between these loss reports that we've received. So let's have a look at them one by one. And as we do, if you just think about at which point you're starting to get nervous about this transaction, and you might want your rule to stop the customer or stop the payment from going out. You might want it to be referred or declined altogether. Okay, so it'll come to life as we go through this. So number one, so the last multiple sessions that we've seen of this fraud loss have been for customers where the payments have gone out sometime between midnight and 1 o'clock in the morning. So actually that one I'm pretty comfortable with. I don't think that's a risk. People do nights, people do unusual shifts. Probably not enough to worry about, but that's common to all of these fraud losses. What we also know is that the device that's being used is actually the customer's genuine device. So again, that's reassuring, and I'm still okay with this, but these are common things that we know from these losses. So let's go a bit deeper. Now, across the online sessions that we're looking at, multiple payments were made in small amounts. So this is slightly strange. If I'm making a payment, it tends to be one payment, pay the window cleaner or the milkman or whatever. But it might not be too unusual for this customer. They might pay their bills all in one go on payday, for example, after a long late shift. But I'm a bit more interested, and I'm going a little bit more towards maybe referring some transactions or building a rule that would refer transactions at this point. What I might like to do is ask the customer if it's them. I might send them a text and ask them to confirm back that it really is them making these payments. So just like your example, Ian, you know, you will receive, or probably many of you will have received a text to say somebody is trying to do X, Y, Z. Is this you? And if you type back yes, it'll release the payment. So that's a rule firing in one of our systems. Now then, going a bit deeper, the device accelerometer data that we collect shows that in all of these sessions, the phone was completely static and completely flat. Now that's very unusual. We know that the payments are going from the customer's phone. It's not another device because we've identified that it's a genuine device and it's a telephone, it's a smartphone, but it's perfectly flat during the sessions. Now I can't do that. I can't keep my phone still and keep it perfectly flat unless I've got it on a table and I'm typing in front of me. So it is possible, but I think I might be edging more towards declining the payment at this point. And I might even write the rule to block the customer's internet banking if we've had a particular large attack of this type of fraud. Let's just go one stage deeper though. Final thing is, and this is a bit techie speak, so 100% of touch events in the payment page had a zero touch area. Now this means that as far as the phone is concerned, no human finger or thumb has touched the screen to make those payments, even though the phone has registered touch events. So the phone says it's been touched, but they're tiny pinpricks, they're 1 pixel touches. So at this point, I'm very, very concerned. So no interaction here, but just to yourself, just say, would you decline or pay? And I think we're probably all agreed that we'd decline on that one. There's some very, very strange things going on there. And this is a real scenario. You know, we know that there was an Android banking Trojan that was released in 2021, which it's been called T-Bot. You can look it up on the internet. There's quite a lot of interesting information about it. And it's used to steal customers' credentials and then steal their money. So the key takeaway here is that you can write rules in systems to detect risky behavior. And this is really the bread and butter of volume fraud detection in many of these systems. And it relies on an ongoing cycle of rule management. Now, I'm not going to go through this in detail because in the interest of time, I want to give time for Q&A. But as you would imagine, number one, we understand the fraud issue. Then we write some rules to stop it. Then we implement the rule into the systems. We monitor the performance of that rule. And then when it's not needed anymore, or if it's not performing, we'll remove it. So no real magic to that. But suffice to say that there are, certainly in a large organization, a tier 1 bank like Lloyds, there are large teams whose job day in, day out is to monitor specific rules through the MI popping out on a daily basis. So I interact with teams who are writing rules day in, day out, changing and tweaking in response to attacks and trends. Okay, let's get into the detail now of some of the systems available to banks and others to help detect fraud. Now, this is one example. This is an interesting one. This is a system that listens into incoming phone calls. Now, all of this information is available on the company's website, so it's all open source. So go and have a look at it if you want to. The company is a company called Pindrop, and they call their system phone printing. What it is it's an acoustic fingerprinting technology that integrates with a bank's or a business's internal systems and identifies people's voices, locations, devices, and all that information is, firstly, it's collected and added to a database for future reference. And that helps distinguish legitimate callers from scammers. But it also listens in real time for hundreds of different features that help identify the uniqueness of a device and a call, and attaches that phone print, like a fingerprint, to a caller, to you as the customer. So it's just like a phone-related fingerprint. So it analyzes both the audio of the call and the metadata that it has about the caller. bolts them together and then reveals whether the caller is using a cell phone, a landline, a voice over internet protocol phone, and it detects, for example, where the call is really coming from, not where it perhaps appears on the face of it to be coming from, and whether it has been cleverly routed from abroad to look like a UK call, whether the caller has been seen before, that kind of thing. It'll look for some technical characteristics, such as things like frequency filters and codec artifacts. Please don't ask in the Q&A what they are, because I'm not a technical person, but that's the kind of thing it's looking for. It'll analyze calls for something called packet loss. I do know a little bit about packet loss. This is where tiny bits of audio drop out of the call, out of the signal. The human ear couldn't possibly detect that, but that's one of the characteristics of a call that may well be fraudulent. Now, you'd never hear it, but the pin drop system can. It can identify caller ID spoofing, where the fraudster tries to trick the telephone exchange into thinking that the originator of the call is legitimate. It can also pick up whether the caller is using voice distortion technology as well. We had a case a couple of years ago now where there was one serial fraudster who was impersonating 13 individual customers and using voice changing technology. So I think he's been arrested now. So the technology does this in near real time, and it provides a riskiness score during the call to the telephony agent. So when you're ringing your bank, there's a good chance that while you're talking about, can I order a checkbook or can I make a transaction, there's a score that's pinged up on a screen that says, yeah, this is legitimate, or not, as the case may be. So that's telephony. That's one of the channels that we as banks will have probably some kind of system on. Let's get into some of the super interesting stuff from my point of view. I love the biometrics. It's often the most interesting aspect of fraud detection, actually, because it's so incredibly clever. So we're now firmly in the digital world with the next few slides. So think about when you use a mobile phone, a tablet, or a laptop or desktop to interact with your bank. What are the different ways you as a person can use that device? And if you think about the way you hold it, the orientation, this kind of thing, these differ significantly, actually, from a data point of view, from person to person. So there are a lot of ways these systems can build a picture of how we do this as individuals. So let's just pick a couple of them now. So hand-eye coordination, top left. So behavioral biosystems, they learn over time how you would normally interact physically with your device. So are you a one-finger typer or a two-thumb person on your mobile? It knows how you swipe. It can actually detect roughly the size of your hand by the sweep, the size of the arc of the sweep of your thumb, for example. It can make a really good stab at knowing whether you're left or right-handed. That's probably quite an obvious one. It learns as well how much pressure you would typically put on your screen and in what kind of ways. So really sophisticated sort of data points. And just going back to that word cloud that we produced, these are all very, very meaningful in this context, pieces of, tiny pieces of data that when you add them up and layer them on top of other detection capabilities, they can create a really compelling picture. Let's just bring some of this to life by looking at a real life example. I'm going to pick on correction behavior. So Ian will know I can't get through to the end of a WhatsApp message without multiple typos. So I make a lot of spelling mistakes. So if you're completing an online field and realize that you've misspelt one of the names of a new payee or something for the payment that you're making in your online banking app, how do you correct that mistake? There are various ways that people do that. You might not have even thought about this in the past. Are you a press and hold person? Or do you hit the backspace, in my case, really hard, multiple times until you get to the mistake? That's more of a physical keyboard thing. Or do you finally pinpoint the error, with precision accuracy, make one or two changes and move on? So you'll probably recognize one of those characteristics. Now, we know from analyzing millions and millions of transactions that the first two are generally pretty normal behavior. And the third one can be a red flag for APP, authorized push payment fraud, where the customer is being coached by the fraudster and so behaves very differently when inputting into fields online. So that's a fairly straightforward but quite telling one, that one, and that all comes out of analysis of millions of transactions and understanding which ones are fraud and which aren't. So as with other systems and approaches to fraud, on its own, the way you correct a field, it's not going to always be a definite indicator of fraud. But as I said before, if you layer things and different indicators, different systems, you can get a very, very good picture. Here's another really interesting one. One pretty common fraud type is where a fraud gang will impersonate the bank or the police and convince the customer that they need to move their money to a safe account. So my lady with the jeweler previously, this is often explained by saying that the police need the customer's help to trap criminals or bank staff who are on the make in the local branch. And the safe account, of course, not safe, it's the fraudster's account. Now we know through analysis of these transactions that there's a hesitation at the point of payment with a little bit of unusual, for that customer, unusual mouse movement linked to that uncertainty. So again, we're not going to ask for feedback on this one, but just have a think to yourself, how long, so we can measure that hesitation as compared with normal timescales. How long do you think that hesitation would be? And when I do this with a kind of a live audience, it can vary from, half a second to 5 seconds or something. It's actually 40 milliseconds. So you wouldn't even know that it was happening, but you're doing it. It's behavior that can't be hidden, just like, the poker tell almost, and body language. You can't hide it. It's around 40 milliseconds. You wouldn't even know it was happening. And moreover, even if you did know, you couldn't do anything about it. So the victim has no awareness that they're hesitating, but these things can be measured and compared with your normal behavior in real time, and a payment can be referred or stopped. Sticking with more biometrics, and actually what we're looking at here, hopefully you can see some movement. Ian, would you just do me a favor? Just tell me that you can see some squiggly lines moving on the screen.
Yes, absolutely.
You can. Fantastic. Yeah. Okay. So these lines, these are 3 different sessions of online sessions on a device of a genuine customer moving around the screen. So the systems can record how the customer moves around the screen. Those colored blobs are the various fields on the screen. And that's normal customer behavior. Now, same account, but a fraudster who's taken over this account, genuine account takeover case. And the movement looks like this. Now, there are some similarities. It's broadly right to left, but there are clearly some differences even to the human eye. But when you add this into a data set, this can look very starkly fraud related. So, these are the things that can be measured. Again, still, this is the final biometric slide, actually the final slide of the session. So this is called session flow. So the diagram in the top left has colored blocks which represent the time the customer takes at different stages of an online session. The wider the block, the longer the time taken. So the blue login, let me just make that a bit bigger for you. The blue login is quite quick. So it takes the customer a little longer to remember their memorable information. They move quickly through the overview screen and pay account screens, and then take a little longer to add the payee details. So the system has learned that this is really typical for this customer. I like the long yellow bar at the end. Actually, that means that, just like I do every time, I've forgotten to log off, and the customer's relying on the auto log off function. So the next graphic shows what you might call, I need to start this moving. There we go. What you might call mouse doodling. So this is a subconscious action that everybody does when using a mouse. And again, the system learns what you are like as an individual. Now, we know through analysis that around 20% of aimless movement is normal. And what we also know is that between 40 and 60% of aimless movement is much more likely, not guaranteed, but much more likely to be a fraud victim on a session with that fraudster being coached. The next graphic has just popped up. I must have pressed inadvertently. The next graphic, this is accelerometer information on the phone. that is being measured. This is being used by a customer in a genuine session to make a payment. So as you would expect, the phone is staying pretty level and steady. So each of those blue dots represents a bit of movement. That will come to life a little bit when we look at the next one. So there are some explosions of movement in this next one. So we know for sure that this session was related to a social engineering attack where there were signs of dictation. So the movement on the chart, so those explosions of data, is where the phone is being brought up to the ear of the victim while they're being told what to type in, then back down in front of them on the palm of their hand to type it in. So again, not guaranteed, but indicative. And again, when you layer on top of all the other system data, you can get a really good view of whether a payment or a transaction is fraudulent. So that's biometrics. That's the end of the slides that I have. Just really to summarize this, I'd just say there are probably three things to take away. There isn't one silver bullet to the challenge of fraud. A multifaceted approach is needed. Secondly, and I know that, mindful of the audience, if this area interests you from a career point of view, it's really interesting and rewarding. You can make a difference to real people, and there's a very, very broad range of skills that will be welcome in a fraud risk management environment. I'm not a technical specialist, I'm a broad generalist, but we have architects and software engineers and all sorts. We run the whole gamut. And then the final thing is really, and that's the take 5 to stop fraud. Whatever your circumstances, going back to the APP message that we were talking about earlier, education and awareness really will help you. And if you run in a business or running a business or just an individual, stay aware of the threats, and we can catch more of the bad guys. And then finally, as promised, some education and awareness for us all on the call. A few links for you to have a look at when you've got a little bit of time. And thank you for listening.
Phil, thanks ever so much. That is, yeah, there's lots of really positive comments coming in from how good that was. I think it never ceases to amaze me the interest about biometrics in particular, and the way that can be spotted behind the scenes. I remember hearing that for the first time, and you actually did a live lecture for us, and thinking, you always get so self-conscious about the way that you deal with your phone, making sure that you are doing the normal things. But yeah, thank you ever so much for that.
It's a great pleasure. Yeah, hope everybody's got something out of it. Feel free to give my contact details if anybody wants any more deeper information.
Yeah, that's great. We've got some questions for you. So we've got 10 minutes left. I'll keep an eye on the time here. We've got a few from Apostolus, and so I'll ask some of those first, some of Apostolus's first. First one is, how advanced is the AI that's been used with UK banking sector for fraud detection prevention? It's probably quite a hard one to answer that, I would have thought. But
yeah, I suppose it depends on your perspective in terms of how advanced you're used to, almost, in the sense that we do have systems that we use. We've got internal systems, and there are systems primarily with third-party providers who use AI. And perhaps the way to characterize it is that we do have systems that learn. We have there's a new system that Lloyds is just kind of introducing at the moment that has improved capabilities for learning and artificial intelligence, machine learning, that kind of thing, than the previous system did. So it'll be a bit of a cop-out, Ian, I'm afraid, on this one. Sorry, Apostolos. So improving, but always work to do, I think, is the answer to that question, which is not a great answer, but greater sophistication all the time. Just try and stay ahead of the curve, really.
Yeah, I think one of the key things there is that it's always trying to stay one step ahead, isn't it? Yeah. So that we'll get more advanced as time goes on. But even having seen an original presentation that you've done, there's been so many developments since that time that's gone through. And as you say, I think COVID's had a big impact on that because of things it's learned.
Yeah. Well, actually, this is why APP is such a fire that's burning, because banks are getting so sophisticated now in terms of the systems and the layers of systems that in the nicest possible way, the customer is the weakest link. It goes back to what I was saying. You can't expect a customer to be a fraud expert. That's our job. But the fraudsters are. So the line of least resistance is to persuade the customer to make the payment, and very hard to detect in many cases.
Yeah, that's great. Thank you. Lots of positive comments coming in. So I think Elizabeth has asked, I'd like to have a recording of the presentation. It will be available on YouTube. So Emma's, who introduced the session, will be sorting that out, and it will be sent out to you, a link to it in due course in the next week or so. Another question from Apostolos that we've got here. He says, are the AFD, which is automated fuel dispenser, are the automated fuel dispenser transactions still a potential fraud payment type that retailers and banks should explore and make more secure?
Yeah, really good question. We did have quite a lot of noise about this a few years ago. That seems to have dare I say it, is this bit going to be recorded?
Yes.
It is. Okay, I'll say it anyway. Dare I say it, the imminent and significant threat has reduced there. So I think the answer is yes. It's always a watching brief. So always, I talked about MI and data outputs for the teams who are constantly reviewing rules. We're always monitoring this kind of thing, and it tends to be a little bit like, it's an oversimplification, but it's like a big game of whack-a-mole, although it's not a game, where one threat will pop up and the banks will respond to that and mitigate losses. And because of that, you know, there's a finite number of people in the fraudster community, fortunately, and if they're turning their attentions, for example, towards APP and away from the automated fuel dispenser MO, for example, that means that the focus shifts. So again, the answer is yes, absolutely. Watching brief, but less of a challenge than it was maybe 3 years ago, I would say.
Yeah, great. Okay, thank you for those, Apostolos. A couple of others. This is a two-part question, so I'll ask you the first part first. And it says, have you watched the Netflix show, The Tinder Swindler?
No, it's next on the list. So right back at you. Have you watched The Puppet Master? And anybody on the call? It's a really great question, actually, because there's a ton of really good stuff on, you know, entertainment, you know, on Netflix and what have you, about kind of fraud related stuff. So The Tinder Swindler, definitely on my list. I finished a couple of nights ago watching the Puppet Master, and if you needed any convincing that human beings can be duped, you know, watch any and all of these. You know, the Tinder Swindler, I'm sure, is the same, but the Puppet Master is a similar one. And another one which is kind of related, which you might have seen it and not watched it. If you haven't, it's brilliant. Watch Sour Grapes. Again, if, you know, experts and intelligent people can be duped, big style. So, you know, all fascinating. Great question.
That's fine. Well, I'll give you the question, so for when you watched it, you can think about it. We're saying, if so, what are your thoughts on the emotional manipulation of the fraudster used? Do you think that pulling emotional strings, such as the scam you mentioned earlier about family members, are one of the biggest hurdles bankers have to tackle with fraud awareness?
Yes. Yeah, it's absolutely. This is the breaking the spell. You know, so romance scams. We've just had February the 14th. We had a big article on our internal interchange about how to spot romance scams. Once you're in, it's very, very difficult to get out, because the emotional pulls and the shame of admitting that you've been duped, you know, as much as anything, you know, it's enormous. A very, very insightful question, that, actually, in terms of that emotional piece, because that's what, when you're dealing with human beings, you know, and you're talking on the phone or across a counter to a customer who has been brilliantly, actually, coached by a despicable fraudster, and in a very convincing way, it's very, very hard to break that spell. And it's despicable, that emotional component to these scams.
Yeah, that's good. I've recently resubscribed to Netflix, so I've made a note of both of those to have a look at. So thanks very much. Question from Matt saying, how involved are the regulators, the FCA, in setting the minimum standard of fraud protection systems across the industry? So basically, how much do the regulators say this needs to be put in place?
Yeah, the direct involvement isn't perhaps as much as you would think. So they will set the regulators will set the environment and the landscape kind of expectations, and then the banks are within that framework with an expectation that we have a moral and business an ethical responsibility to protect our customers. We will go away and try and meet those requirements using whatever systems are available. So there's no real direct involvement in terms of these are the systems you will or won't use, but clearly they're very, very interested in the outcomes of those. And actually, so for example, so we had a large case a couple of years ago actually, and it had an internal fraud component as well, and the regulators will, as rightly they should do, they will sometimes oversight and sometimes say, we want to have a deeper look at that case, and we want you to tell us what you're doing with your control framework around that particular type of scam. So that tends to be more the involvement they would have directly in my kind of world, rather than being involved at the construction of the control framework that we would have internally as an organization.
Great, that's lovely.
Great question though. Really good question that.
Yeah, thanks, Matt. A question from Gordon says, great presentation, and there's loads of positive comments in here, Phil. So well
Thank
done.
you. Thanks, Gordon.
What are your thoughts about the current mechanisms for customers to recover losses from fraud? So that's mechanisms for customers to recover losses from fraud. Do you think the current balance is appropriate or needs reassessed?
Yeah, it's again a very good question, Gordon. I think there is there's room for reassessment. So Gordon, you may be aware, and others may or may not be, of what I would call the contingent reimbursement model. So actually there's no statutory requirement, there's nothing enshrined in law in this country that says that customers have to be refunded for fraud. So in 2019, the contingent reimbursement model, which is a voluntary code among banks and others, was stood up, and it was designed to do what probably you're describing, Gordon, which is to make sure that the balance is right, so that customers are refunded when it's a genuine case, and provided they haven't been willfully or otherwise negligent, and this kind of thing. It's all in there. And actually one of the links I've got at the end of the slideshow is for the contingent reimbursement model. Again, it's a bit of a drier read, but it's worth a look at. So there is a code. There is noise in amongst the people who are signed up to the code, saying that what you were saying, Gordon, that it's probably time now to reassess and to reevaluate and to move to a longer term, a more stable model of some description. What that will look like, no telling at the moment.
Excellent. Okay, there are a couple more questions, but I'm really conscious of time. We're hitting the 2 o'clock mark now, so I think, Emma, if we can take those away and perhaps send them on to Phil, just to sort of give an answer to. But loads of really positive comments coming in, Phil.
Great.
And
thank you.
It's evident a lot of people have learned so much from that. So a massive thank you to you. Just to reiterate that the recording will be available. I think, Phil, if you get the slides to us, we'll sort something out and liaise. But certainly the recording will be available on YouTube within the next week, and that will be sent. A link will be sent by Emma and the Chartered Banker team from that. So thanks to Phil Caffrey. Thank you for all your questions and your interest, and from everyone from Chartered Banker, ICAEW, and Manchester Metropolitan University. Thanks for joining us, and we'll see you at the next one.